and the Nasdaq 100, which mega cap has more to prove and which matters most to the markets. Joining us now, Dan Niles, founder and portfolio manager of Niles Investment Management. Dan, great to have you with us.
My pleasure.
You are most excited about Apple, but it seems like they have to deliver a lot in order for you to be vindicated here. Bigger form factor, so an AI-enabled iPhone.
Yeah, and with Apple, it's more of a call for this year, not this quarter. I mean, obviously, into this quarter, everybody's concerned about memory prices and what that does to forward margins. But I think services, will be surprisingly good, and that has very strong margins. And so you may get a bit of an offset there. I think the quarter is fine. People are nervous, obviously, about the guidance. But the real thing is, if you think about this entire year and where Apple's come from, they're arguably two years late on AI, and you haven't had a really good phone in a while. And you're finally going to get a foldable iPhone at the end of this year, and it's going to be having an AI-enabled Siri. And if you look at the past, when you had the iPhone 6, for example, and you moved from a 4-inch screen to a 5.5-inch screen, revenues went from growing 7% in fiscal 14 to 28% in fiscal 15. And don't forget, Samsung's had a foldable phone since 2019. So Apple, as usual, is pretty late, but that's what I think drives, actually, for the first time in a long time, a pretty solid upward.
That's definitely a great point that he mentions. And I think that for those of you who may not know, welcome back to my channel. If you are new to the channel, welcome back to my channel. Welcome back to another video here. Make sure you guys subscribe to the channel, share the video, and also hit the like for the algorithm so that my videos will be in the YouTube algorithm more, so that it promotes my channel more. I would appreciate that very much. And yeah, so this week, for those of you who may not know, this upcoming week in the financial markets, four of the big mega cap Magnificent Seven stocks are going to be reporting earnings this week. So four of those companies are going to be Apple, Microsoft, Meta, and Tesla. So those four companies will be reporting earnings this upcoming week, and those earnings will be very important because why? Investors are going to be looking to these mega cap companies in terms of their earnings, in terms of seeing if they meet expectations in terms of their profit margins, their growth and innovations around AI, and also too their forward guidance heading into 2026 and also 2027 as well. So I think those three things are going to be very important. And also too, for those of you who may not know, the Magnificent Seven stocks are the seven of the largest technology stocks on the stock market. They make up a big percentage of the major indices, such as the S&P 500 and the Nasdaq. So those are the seven of the largest companies that that are pretty much technology heavy. They have a heavy weight in terms of the major indices. And also too, whenever they report earnings, those mega cap companies, those tech growth stocks, whenever they report earnings, it has a much more influence and impact on the overall general market as well. Just keep that in mind. So I think that in regards to Apple, I think that Apple will probably potentially, it could have a good earnings report, right? And I think that for Apple, what's going to be very important is, besides their services, I think that the services aspect could potentially be good. I think that that side, the consumer side, could potentially be good. But I think investors are going to be mostly, looking forward to what is the forward guidance heading into 2026 and 2027. And also, too, what does the CapEx spending look like? Where is that money going? How is it being spent? And also too, what how is that AI spending, that CapEx spending, then being materialized in terms of their profit margins for the business, right? For the growth aspect of the company. I think that's going to be very, very important. And also too, what is the innovations around Apple Intelligence? Apple has been in the news and narratives about Apple Intelligence. They're continuously investing in AI. So I think that there's going to be a lot of questions around about for Apple about where is what is the latest moves on the AI, the AI part of their business in terms of their business model. I think that's going to be very important. And also too, what's very important to understand too is that majority of these Magnificent Seven stocks have been being down a lot, in terms of their stock price. Majority of them have been down almost 15 to 17%. So major decline in their stock price. But what I think is very important to understand is this. I think that although they may potentially report good earnings, I could be completely wrong. They could potentially report good earnings. Despite that, however, I think that there could be a lot of selling pressure on their stocks due to how beaten down they have been, and also too, in addition to that, I think that, investors may still have some doubts and worries about AI CapEx spending, about how that can actually translate into actual profit margins, and actual, growth for all these companies. So I think that's going to be very important heading into earnings. Three important things: profit margins, innovations around AI in terms of their CapEx spending, and also too their forward guidance heading into 2026 and 2027 in terms of what they project their profit margins, their earnings per share, and the innovations and how those things will translate into actual profits for the company and growth for the companies heading into 2026 and or 2027. So I think those three things will be very, very important for the Magnificent Seven stocks. And also too, at the end of the video, I will be summarizing, what this tech investor is talking about with regards to the Magnificent Seven. And also too, I will also go into the chart. So we'll take a look at the S&P 500 and the Nasdaq to see what the technical analysis looks like on the charts to help you guys understand that the S&P and the Nasdaq have broken critical support levels. So I just want you guys to be on alert that despite the tech companies, the Magnificent Seven stocks may report good earnings, we have to be on the cautionary side to understand that although they may report good earnings, if those earnings do not at least meet or exceed expectations, the markets could be in for a bigger drawdown in terms of pullbacks. There could be as much of a 10 to 15% in the stock market, within the next month to 2 months or even 3 months, right? Anything can happen. I could be completely wrong, but this is just based on what I'm seeing on the chart. So at the end of, after I give my summary of this video, then I will go into the technical analysis aspect of the S&P 500 and the Nasdaq. All right, guys. So just keep those points in mind, and yeah, let's get to the rest of the video.
Trade cycle.
Is it a certainty in your view that Apple's margins get impacted by the high price of memory? I mean, we see the memory stocks screaming higher basically every day, it seems. So is that a foregone conclusion that those who consume those memory chips that need them will pass that cost on?
Yeah, I mean, Apple's going to get affected, but remember, Apple's buyers are also wealthier buyers. And so Apple will try to pass those costs forward. And so I'm sure the gross margins, operating margins will have a little bit of downward pressure, but that's why the stock's where it is. I think if you're thinking about the entire year, what you should be getting excited about is I may actually have a good product that I can buy relative to the Android ecosystem for the first time since AI came out and arguably before that. And so that's what makes Apple, I think, interesting for the year. And I think when they give the guidance, I think the quarter is going to be actually a very strong quarter, but I think when they give the guidance, that'll kind of clear the decks for people to start thinking about the rest of the year.
Dan, we saw a little bit of a bounce in Microsoft, which, itself is looking cheap relative to the last couple of years. Nobody really loves the spenders right now. They're kind of using all their what would be free cash flow to build data centers and all the rest of it. Do you see a kind of a contrarian opportunity in any of this, whether it's software more broadly or just others in the Mag 7?
Well, it's going to be interesting to see how discerning people get on Microsoft, because I think they're actually going to put up pretty solid numbers for one simple reason. If you look at OpenAI exited 2024 at about a $6 billion revenue run rate. They're exiting 2025 at about $20 billion. Their plan is to exit the year we're in at about $44 billion. And that really drives Azure. Now, the losses continue to grow like crazy. And remember, Microsoft owns about 27% of OpenAI. Mm-hmm. So I think it's going to come down to, do people look at, oh, well, the numbers all look great, or do they start to focus on, well, how's OpenAI going to fund all these spending ambitions? And that's really what's been affecting these two separate groups of stocks since late October, because the Google ecosystem since October 29th is up about 20% since that period year to date. The OpenAI ecosystem, which includes SoftBank and Oracle, et cetera, that's down about 20% since October 29th. So I think it's really going to come down to that. I actually like Microsoft into this because I think they've got more plays than just OpenAI, and they are actually generating a fair bit of cash. But to what Melissa brought up earlier, the memory costs going up a lot actually impacts them. And we saw this with Intel, where it is going to impact sales of PCs, and that's very profitable, unlike OpenAI business, for Microsoft through their Windows franchise and Office. So that's the one thing.
Very good points. Great interview by CNBC. I think that this tech investor, he mentioned some very amazing points that I agree with. I think that, and also from Microsoft, he was talking about Microsoft here. I think that for Microsoft, I think that, people investors will be, looking forward to what their cloud business growth is doing in terms of Azure. I think that that's going to be very important also too. What is CapEx spend looking like and how is that CapEx spend then translating into actual profit margins for the growth side, for the growth aspect of their business in terms of the cloud business as well. So I think that that's going to be very important. And also, too, the CapEx spends involving the data centers as well, because that's been a huge thing within the news and the narratives that there's going to be massive data centers that's going to be built to help the AI revolution. I think that there's going to be a lot of questions around that, around, for the Magnificent Seven stocks, how is that CapEx spending then going to be translating into, these data centers being built out, where they're being built out, how much energy will they be using, what kind of energy will they use, what are the costs of these data centers, and how would that then, translate into them actually, being able to, you know, retain profit margins from those data centers, right? And how would that then impact the profit margins of their businesses, of their business model within the next, 2 to 3, 4, or even 5 years from now, right? So that's gonna be very important, heading into this week on in terms of earnings week on Wall Street. So I think that's gonna be very, very important just to see, what the Magnificent Seven, what the four companies to start the earnings for the Magnificent Seven, what the four companies say in terms of their profit margins, their AI innovation in terms of their CapEx spending, data center investments, and also how those CapEx spendings will then translate into actual revenues for the company, and also too how what is the guidance looking like heading into 2026 and 2027 in terms of their profit margins, their earnings per share, and their quarter-over-quarter and or year-over-year profit margin growth. So that's going to be very, very important. Those three things are good. I think those three things are going to be very, very important in terms of what investors are looking for in terms of their earnings, in terms of their earnings report, and also on their earnings expectations. So considering that, just keep in mind that this week there will be a lot of volatility in the markets, due to, the Magnificent Seven stocks having, heavy weights in the major indexes and major indices, especially in the S&P 500 and the Nasdaq. So just keep that in mind. And also too that, with their stocks being down the way that they have been being down, almost, 15 to 20% decline. I think that despite that, they may, at least meet expectations or even exceed expectations, which I think that they're gonna have to exceed expectations due to Intel not being able to meet all the expectations that, that Wall Street was expecting of them to meet. I think that people have to understand this too, that for Intel, when it comes to stocks like Intel, and this applies to any stock that you look at, that whenever stocks have a massive upside in price action heading into earnings report, especially when they have reached a all-time high, there is a there is a there is a similar pattern where when stocks reach massive all-time highs right before the earnings report has to be nearly perfect for them to even have more upside in stock price. And even if earnings are perfect or even, subpar, or, just misses expectation, the stock is still far. The stock could still fall. There has to be, an understanding that despite stocks, may go up over the long term, which that happens, oftentimes. However, it's important to understand that, right, that whenever stocks are at all-time highs heading into earnings report, whenever they have a massive run up in terms of their stock price, their earnings report has to be perfect. If it's not perfect, then the stock may fall, whatever percentage it may fall. But just keep that in mind, right? Whenever a stock goes up massively into earnings report, whenever it reaches the all-time high, there is a similar pattern that the stock may fall, right after they report their earnings. And that's not a sign that, that the company is horrible from a fundamental perspective. That's just, probably investors taking profits off the table, because that happens all the time. Because why? Whenever a stock is at all-time high, they have to report perfect earnings. If the earnings report is not perfect, then investors will take their profits off the table. Because why? There has to be some sort of other catalyst that would then enable that stock to go up even higher than where it is currently. All right. Just keep that in mind for Intel stock and why it has an Intel stock and why it was declining right after they reported their earnings. I think the same could apply for the Magnificent Seven stock. I think that although that they may report good earnings, or they may, exceed expectations, I think that that investors may still take profits off the table due to concerns around the AI bubble that's been, circling in the news and the narratives, due to concerns that the AI bubble, the circular economy, all the data center investments that's being made, and how those things are going to be actually translating into actual profit margins and revenues for these companies and the growth aspects of their businesses. All right, guys. So just keep those things in mind. So once again, Apple, Microsoft, Meta, and Tesla, all four of these companies will be reporting earnings this week. These earnings report will be very, very important in terms of, giving Wall Street guidance to, how the markets could possibly perform heading into, the next 6 to 12 months in terms of the trading year of 2026. So I think that's going to be very important to look forward to. And also too, the three things that I mentioned, right? Profit margins, right? Profit margins, innovation around AI in terms of the CapEx spending and how that CapEx spending will then translate into profit margins for the companies and the actual growth story of those companies in terms of their quarter over quarter and year over year growth. And last but not least, what is their guidance heading into 2026 and or 2027 in terms of their profit margins, their earnings per share, and the year over year growth, right? All right, guys. So those three things are going to be very important, in terms of investors looking for. And also, too, the data centers, right? I think that there's going to be a lot of questions about data centers in terms of CapEx spending. There's going to be, a lot of questions around, if those data centers are going to actually translate into actual revenues and profits for those companies. All right, guys. So now that we have discussed, this video, great interview by CNBC. Now that we have discussed this video, now that I've given you a brief summary of what this tech investor was talking about in terms of Apple, Microsoft, and the Max 7, which are reporting this week in this week's earnings week, for this week's earnings week on Wall Street. Now that I've discussed that, let's go into the charts to discuss the S&P 500 and the Nasdaq. Because why? The S&P and the Nasdaq, and I said this in previous years that a stock market crash could possibly be coming, and the S&P and the Nasdaq have broken key support levels. So now let's get straight into the charts to see what the charts are looking like on the S&P and the Nasdaq. All right. So let's see what the charts are looking like. So let's actually go to trading view and see, where the levels are, so that I will, show you guys what the charts are saying, so that I could give you guys a guide into what to look for in the markets heading into this week and also in the short term and even long term. All right, guys. So let's get into the S&P chart. So this is the S&P 500 chart. This is the daily chart on the S&P 500 chart. This is a price channel that connects all the highs and lows going back to 2020. The lows of 2020, the highs of 2021, the lows of 2022 and 2023, and the highs of 2025 and 2026. All right. So that's very important to understand. Now, for the S&P 500, right? What's very important to understand is this, right? The S&P 500 has broken critical support levels. What does that mean, right? So for those of you who may have watched the previous video, if you have not watched the previous video, I recommend you to watch that video, because it will give you a great guide into understanding where price action is at now, what it has done before, and where it could potentially go in terms of the S&P 500. All right, guys. So that's very important to understand. All right. So in terms of the price action on the S&P, what's very important to understand is this, right? The S&P 500, when we look at the daily chart on the S&P 500, this is the daily chart on the S&P 500, right? So in the past, couple of months to a year, the S&P has been forming a huge wedge pattern, right? So with the wedge patterns, once again, I'm gonna explain to you guys again. With the wedge patterns, price action starts very wide and then it gets squeezed. It gets tighter and tighter and tighter until it has two decisions to make. One decision, it can either have a massive break to the upside or a massive break to the downside. Now, as we can see here on the S&P 500, right? Price action has actually broken to the downside. What does that look like? So look at this, right? So let's look at the charts here. On Friday, on Friday, January 16th, right? S&P was at around 69.34, and then on Tuesday, right? On on Tuesday, we gapped below this key support level. What is that key support level? Well, look at this trend line, right? This trend line of the wedge pattern has been connecting all the lows going back to April of 2025 to then November of 2025 to December 2025, January of 2026, and also to the middle of January 2026. So every time that the S&P has hit this trend line, this has been major technical support on the charts based on technical analysis. All right, guys. So every time we've hit this line, this has been major technical support on the charts, right? This trend line right here. Every time we hit this trend line, we've gotten some major price action support. But now that we have broken this price action support, this could spell danger for the S&P 500. Why? Because whenever a wedge pattern is broken, specifically a wedge pattern, right? Whenever a wedge pattern is broken to the downside, it has a major move to the downside, right? And typically in technical analysis, whenever you break below and confirm below a level, right? Whenever you break below and confirm below a level, right? There is a tendency in technical analysis based on the years that I've been studying these markets and based on actually, looking at, different trading strategies and looking at different assets from an investing perspective and trading perspective as well, and looking at different charts and studying these markets. In technical analysis, whenever you break below a level and confirm below a level, right? Especially when you gap down as well, regardless of the asset that you're looking at, it's typical in technical analysis for us to come right back to test these levels. So right here on this support level now acts as major technical resistance because why? What was previously technical support now becomes major technical resistance on the charts. All right. So on the S&P, if we were to get back up to around 69, 63 on the S&P, this would be major technical resistance on the charts. All right, guys. So just keep that in mind. So once again, we gapped down on the S&P, we broke below and possibly, and I think based on the charts right here, we broke below and confirmed below on the S&P 500 on the wedge pattern. So we broke below and confirmed below the wedge pattern. Now we've been having a little bit of updates, right? But what's very important to understand is this, right? The market has not had major updates ever since we broke below and confirmed below the wedge pattern. Why is that? Well, that could be due to many things. That could be due to geopolitical risk. That could be due to market panic around the AI trade. That could be due to many different things, with investors worried about, where the markets could be going in the near term to short term and even in the long term, right? So just keep those things in mind. But specifically for the S&P 500, ever since we gapped below, right? Ever since we gapped below, this support level right here, we broke below and confirmed below the level. We have failed to get right back up to this trend line right here and also right back up to this major resistance level, right? So we failed to get back up to this level and also this resistance level, right? And due to the S&P not having much of price movement, right, in terms of major buyers and major sellers, right? Anytime you have this in technical analysis, right? And I'm actually show you guys. Anytime in technical analysis, when this happens, right? Whenever price closes around the same area where it started, that means that there were buyers and sellers, right? Buyers and sellers met at an equal point to the point where no one basically won over anybody, right? So, in based on the charts, right? When we look at the charts, now that we have failed to at least go back to this level, the S&P 500, right, has stayed in this relative range. We have not go back up to this trend line right here, and we have not even go back to this resistance level, right? So both of these lines will act as major resistance on the S&P 500, right? So considering that they will be major resistance, and considering that we have not gapped right back up to these levels, because typically in technical analysis, when we gap below a level, when we break below and confirm below a level, especially when we gap below a level, it's typical in technical analysis for that gap to be filled. And since that we have failed to fill that gap, it could spell that this market could be in danger of a further collapse in downside price action. Now on the S&P 500, what are the levels to look at? Now on the S&P, right? Let me actually show you guys where the levels could be at so that you guys can get a clear understanding of what the market is doing. So on the S&P 500, right? If we were to go down in price, always remember this, right, guys? And I will always continue to emphasize this in every video on my YouTube channel, right? Markets do not go up and they do not go down in a straight line. Once again, markets do not go up in a straight line and they do not go down in a straight line, right? So on the charts, based on the charts right here, ever since we got down on the S&P 500, we broke this major trend line connecting all the support levels, right? We broke below and confirmed below it. Now that we've gapped below it, what's going to be very important to understand is this. We may have some down days, but there may be days where we trade sideways or consolidate sideways. That just means that price action is basically going sideways, is not having much price fluctuation or price action volume. So with that being said, right, we may come down, consolidate, then come down, then consolidate, then have our next leg lower. Ultimately, in the near term to short term, the S&P 500 could possibly go all the way down to around 6109.85. That's the first technical support level, right? First technical support level. If we were to break below and confirm below the level, right, there is a chance that we could get some major support in terms of major technical balance in on the charts based on this level. But if we were to ever break below and confirm below this level, right, if we were to break below and confirm below this level, then ultimately the S&P can potentially go all the way down to around 5694.05 on the charts based strictly on technical analysis only, right? So always remember that, guys. Remember, guys, as I always tell you guys in all these videos, right? You want to always look at the fundamentals and the technicals, because why? The fundamentals and the technicals will help you to understand what the markets are doing in terms of market price action. And also, the technical analysis will help you to understand three things. It helps you to understand what price action has done historically, what price action is doing right now, and what price action could potentially do in the short term and or in the long term, right? In terms of looking at the charts, looking at different technical patterns, and understanding the similarities and the patterns that happen on the patterns, and kind of drawing the similarities and the correlations so you guys can understand where the market is potentially headed to in the short term and or even in the long term. All right, guys. So that does it for the S&P. So keep those three levels in mind. After we've broken key support on this trend line right here, we've broken this trend line, key technical support. After we have broken this trend line that connected all the major support levels right here, all these support levels, we have gap below, we have broken below, and confirmed below the wedge pattern. Once again, with the wedge patterns, right? Whenever price gets this squeeze, two decisions are going to be made. Either price is going to have a massive break to the upside or a massive break to the downside. Now that we have gap below the wedge pattern, we have broken and confirmed below. Now that that has been done, and we failed to pretty much come back to these resistance levels, now the market could be for bigger downside risk in terms of price action, right? And once again, markets do not go up in a straight line, and they do not go down in a straight line. So we may come down, have some sideways consolidation, then come down, have some sideways consolidation before we have our next leg lower, ultimately potentially hitting to around 6109, 6109.85 on the S&P 500 for our first technical support level. If we were to ever break below and confirm below this first technical support level, then the S&P 500 could potentially go all the way down to around 5694.05 based strictly on technical analysis. All right, guys. So that does it for the S&P chart. Let's go now to the Nasdaq to see what levels the Nasdaq is breaking. Right. So let's go over to the QQQ chart to see what's happening on the QQQ chart. Just waiting for this to load. There we go. So on the QQQ chart, right? This is another daily time frame on the Nasdaq QQQ. Once again, for those of you who may be new to the channel, those of you who may not know what the Nasdaq QQQ is, this is the ETF that tracks majority exposure to the technology sector, particularly the Magnificent Seven, particularly the Magnificent Seven stocks. So just keep that in mind. So this this includes your Nvidias, your Microsofts, your Apples, your Teslas, your Metas, your Amazons, your Googles, all of the major Magnificent Seven stocks. So just keep that in mind, all right, guys. So on the Nasdaq QQQ ETF, these are the major lows to look out for, right? So let's first look at the wedge pattern that has been broken down on the Nasdaq on the QQQ. This is something that I've been letting you guys, this is something that that I told you guys about in previous videos, right? On the Nasdaq. So look at this on the Nasdaq, right? On the Nasdaq right here, if you look at the chart, let me actually zoom in so you guys can actually see what this looks like. So, okay, this is much better. So on the charts, right? Look at this. On Let's see. On Friday, January 16th, we broke below the wedge pattern, right? Remember with the wedge patterns, right? Price action starts very wide and then it gets very squeezed. It gets squeezed to the point where it has to make two decisions. either a massive break to the upside or a massive break to the downside. And based on the charts here, it looks like now the Nasdaq has not just broken the wedge pattern, right? It broke the wedge pattern, but it also confirmed below the wedge pattern. Now, where did the confirmation occur? The confirmation occurred right here, right? Any close below this level, right around $618.98 on the Nasdaq, will be the official breakdown and confirmation below the wedge pattern of the Nasdaq. So now that we have broken below and confirmed below Nasdaq, and look at this, we also gapped down on the Nasdaq QQQ. Now that we have done that, looks like that we're coming right back into this resistance level. Always remember that right here on the charts. Let me show you guys again, right? Always remember that what was previously technical support on the charts now becomes major technical resistance. Now, whenever trend lines or major technical patterns get broken, what was previous support now becomes major technical resistance on the charts, right? So look at this, right? Every time we hit this level on this trend line that connects all the support, every time we hit this level is going back to April of 2025. This was major technical support. This was major technical support. This was major technical support. And this was major technical support. So all these levels right here were major technical support on the Nasdaq QQQ. Now that we have broken below and confirmed below the Nasdaq QQQ on the charts, and now that we're coming right back up to this level to retest this level, now that this was previous support on this on the chart the chart, what was previous support now becomes major technical resistance. So what right here, if we were to hit this level one more time, this should be a major rejection based on technical analysis, based on the charts. So what are the levels to look at for on the Nasdaq, right? So on the Nasdaq, on the QQQ, this is the levels to look out for, right? We may come right back up to this level, but we should probably expect a rejection from this level due to the fact that this is now serving as major technical resistance on the charts. So once again, markets do not go up in a straight line and markets do not go down in a straight line, all right? So always remember that, guys. So based on the charts, right? Markets, the Nasdaq QQQ, there is a possibility that it could come down, consolidate for a few days or weeks, come down, then consolidate and have its next leg lower. And ultimately on the Nasdaq, right? Ultimately on the Nasdaq, we should get to around, let's say, the next potential technical support level on the Nasdaq QQQ could potentially be around 534.88. That could potentially be the first technical support level on the Nasdaq QQQ, right? So always remember this, right? So just keep that price level in mind. The first potential technical support level on the Nasdaq QQQ could be 534.88. Where am I getting this level from? Every time we've hit this level, when we hit this level, right? This was major technical resistance, right? What was major technical resistance now becomes a major technical support. So this just goes to show you that it works both ways on the chart. So always remember that, guys. All right, guys. So just want to let you guys know of that. All right. So on the charts, right? Based on what we're seeing here, right? Right here, whenever we came to this level, we got rejected in price action. Whenever we came back, we got rejected. And even around here, we got rejected. So we got rejected 3 times at this level. This served as major technical resistance. And look at this right here. We came right back up to this level. We got rejected, but then we eventually broke above and confirmed above the level. We gapped up and broke above and confirmed above the level. And now we've been on the uptrend ever since. Now, based on the charts, there is a possibility that we could come right back to retest this level. And this should be major technical support on the Nasdaq. Once again, this goes both ways, right? Previous support then becomes major technical resistance, and then previous resistance then becomes major technical support. It goes both ways, vice versa, right? So always remember that, guys. So when with this price level, right? Those previous resistance on the Nasdaq, with this being previous resistance, now this becomes major technical support. Now, in the case that we do break this level, right? Because that can always happen, right? So in the case that we do break this level on the Nasdaq QQQ, that there could be the possibility that we could break this level. In the case that we break below and confirm below this support level on the Nasdaq QQQ, right? This level right around 534, right around 534.88. If there's any case that we break below and confirm below this level after we get a major technical bounce on the Nasdaq QQQ, if we do break below and confirm below this level, then the Nasdaq QQQ could potentially go all the way down to 487.04. Once again, this is strictly based on technical analysis. This is not based on feelings. This is not based on hype. This is not based on news and the narratives. Once again, guys, I'm gonna always emphasize this to you guys. You want to always make sure you look at the fundamentals and the technicals, because why? The fundamentals and the technicals will help you to understand what the market has previously done, where the market is at right now, and where the market could potentially go into the price action in the short term and or even in the long term as well when you look at different time frames. So always remember that. Always remember that, guys. All right. So once again, we broke below and confirmed below the wedge pattern on the Nasdaq QQQ. Right. Once again, it could come down, have some consolidation, come down, have some consolidation before it has its next leg lower. Once again, major technical support should possibly be around 534.39. That's based on the previous resistance at this level. Previous resistance where we got rejected at, we broke above and confirmed above the level, and now there's a potential that we can come right back to retest this level, which will be major technical support based strictly on the charts. All right, guys. So always remember that. Now the 534.39 level, if we get a major technical bounce, that will be a good thing on the Nasdaq, because typically whenever you have a big drawdown like that, we should potentially get a big technical balance on the Nasdaq. But at the same time, what you have to understand is this, right? Whenever markets are in a downtrend like that and it gets a technical bounce, that then forms a bear flag on the markets, right? So what a bear flag is when you have downwards price action, right? You have downwards price action and then you have some consolidation. That's a bear flag. Downwards price action and then consolidation sideways for your next leg lower. So in any case that we do get a major bounce from this technical support level, in any case of that happens, right? On around the 534.39 level, there is a chance that we can break below and confirm below this level. In any case that we break below and confirm below this first technical support level, then the Nasdaq QQQ could potentially go all the way down to 487.53, strictly based on the charts. All right, guys. So that actually does it for the video for today. Hope you guys enjoyed this video. Hope you guys actually learned something from the video. Let me know what you guys think in the comment section down below in terms of your thoughts on my chart analysis. If you guys ever have any questions, comments, concerns, or even any confusions based on what I'm doing on the charts, let me know in the comment section down below, and then I will discuss that in future videos as well. And as always, I will keep you guys updated on what the major indices are doing in terms of the technical analysis aspects of things, because as always, I want you guys to always remember this. You have to look at the fundamentals and the technicals, because why? Those two things will help you to understand what price action has done historically, what price action is doing now, and what price action could potentially do in the short term and or even in the long term. All right, guys. So always remember that the fundamentals and the technicals will help you to not just implement your investment strategy, but they will help you to implement your investment strategy the right way, right? Implement your investment strategy the right way, mitigate against risk in the market, and hedge against market fluctuations. Always remember that, guys. All right. So always remember that. And once again, this is the end of the video. Hope you guys enjoyed this video. Hope you guys enjoyed my thoughts on this video, my perspective on this video. As you know, the goals of these videos is to help you guys as much as possible, to educate you guys on the markets, to educate you guys on the economy, so that you guys can get a better understanding of what's going on based on the fundamentals, based on the charts, so that you guys could then understand the markets from a totality perspective, right? So always remember that. All right, guys. Once again, hope you guys enjoyed this video. Let me know what you guys think in the comment section down below. If you guys can share this video with anyone that you know that this video can be very helpful to, I would appreciate it very much. Make sure you guys subscribe to the channel, like the video, hit a like for the video, and also share the video with any family, friends, or even relatives you may know that this video can help, and I would appreciate that very much. And also too, as a disclaimer message, just want to mention that to you guys, that the information and opinions that I'm providing to you guys in this video are not financial advice, right? So please seek the advice of a certified financial advisor. And also too, please do your own due diligence into any stocks, ETFs, cryptocurrencies, and commodities, because trading and investing comes with substantial risk. All right, guys. So just want to let you guys know that. And yeah, once again, hope you guys enjoyed another video. Welcome back to another video on my channel. Hope you guys enjoyed another video, and I'll see you guys in the next video. I just want to bring this video to you guys just to show you guys, what the price action is doing on the S&P and on the Nasdaq, because we could be in for a major correction, despite the fact that we could get great tech earnings from the Magnificent Seven stocks. Once again, Apple, Microsoft, Meta, and Tesla are all reporting this week. So those key stocks will be on watch this week on Wall Street in terms of what they deliver in terms of their expectations, what they deliver in terms of profit margins, AI innovation in terms of their CapEx spending, and also too their guidance heading into 2026 and or 2027. All right, guys, you guys have a wonderful day. Enjoy the rest of your year, and I hope you guys enjoyed this video. Make sure once again subscribe to the channel, like the video, and also share the video with anyone that you know, with anyone that this video could be very helpful to. And I appreciate you guys very much, and thank you guys for watching another video on my YouTube channel. And I'll see you guys in the next video. Thank you for watching.